In CBDC, just as paper currency, you go to a bank, let us say you are drawing some 1,000 rupees currency notes. You draw 1,000 rupees, keep it in your purse, you go to a shop, you have to pay 500 rupees, you take out 500 rupees and pay. Here also, you will draw the digital currency and keep it in your wallet, which will be basically your mobile phone.
Money has always been more than just coins and notes. It's a reflection of power, trust, and control. If we go back in time, Asian Indian used barter, then metal coins, and eventually paper notes under the colonial British system. After independence, the Reserve Bank of India became the sole issuer of our currency, and for decades, physical cash ruled our economy. But in 2016, with demonetization, we saw for the first time how suddenly money could lose value overnight and how much power a government has over our financial system. Then came the smartphone revolution. UPI Unified Payment Interface was launched in 2016, and within a few years it changed the way India transacts. No need for wallet stuffed with cash, no need for ATM queues, just a tap on your phone. In fact, India became the global leader in digital payments, even ahead of US and China, processing billions of transactions every month. But here is the catch. UPI is not money in itself. It's a simple gateway, a middleman that moves money from one bank account to another. If the banking system goes down, UPI collapses with it. Now enters the digital rupee, India's version of central bank digital currency, CBDC. Unlike UPI, the digital rupee is not a transaction method. It is actual money itself, but in purely digital form. Issued directly by Reserve Bank of India, it is equivalent to cash but without paper or coin. Imagine having 5,000 rupees in your mobile wallet, not as a balance linked to your account, but as actual RBI issued currency, like a digital note. That means you don't even need a bank to hold or spend money. This is revolutionary, isn't it? Because for the first time in history, money could bypass bank completely. Today, UPI depends on bank. Your money is debited from one account and credited to another. But the digital rupee, the money moves instantly from your digital wallet to someone else. No middleman required, faster, cheaper, and safer. No bank server failure, no dependency on third parties. But every revolution comes with a price. The digital rupee gives the government unprecedented control. Every transaction can, in theory, be tracked. Unlike cash, which is anonymous, a digital currency records a trail. That means black money, corruption, and fake notes could be eliminated. But at the same time, it raises a chilling question. Will privacy in financial life disappear forever? Imagine the state knowing every cup of tea you bought, every donation you made, even every gift you gave. There is also a question of banks themselves. If citizens start holding digital rupees directly in RBI wallet, bank may lose deposits, and without deposit they cannot lend money. That could shake the foundation of financial system we know today. Some experts warn that this shift might make banks weaker while giving the central bank enormous power on citizens' money. So here the question comes, will digital rupee replace the UPI? Not immediately. RBI says it is designed to complement, not to compete with UPI. But history shows us that technology evolves fast. Just like mobile payment overtook cash in less than a decade, the digital rupee could one day replace UPI as a default payment mode. And if that happens, it won't just change how we pay, it could redefine the very relationship between citizens, bank, and the state. The story of money in India is at a turning point. From barter to coin, from notes to apps, and now to digital currency. Every step has shifted power in new direction. Now the question is, will digital rupee empower us or will it make us more control than ever before? Tell me your thoughts on this in the comment box below.